Okay, hello everybody. Welcome to today's event. We're going to get started. My name is Jason Gumpert from MSDynamicsWorld.com, and our presenter today is Barna Ugrowski of Adifo Software. It is great to be able to welcome him for the first time. And I want to just do a couple of housekeeping items before we get started. So I wanted to remind folks that we will be leaving time for questions. Please do enter your questions at any time during the session. You can look for the Q&A block. You should see to the right of the main presentation area to enter those. Also, do be on the lookout for a poll question we're going to have in a few minutes. That will be showing up on again in the panel, in the webcast panel. And without any further delay, we're going to get started. I'd like to hand things off to Barna to begin.
So hello everybody. My name is Barna Ugrowski. I'm working for Adifo. So I would like to welcome everybody who joined to our webinar about risk management. Nowadays, companies are challenged every day to optimize their commodity sourcing and manage risks. But how to do this accurately? And because what we see that in a lot of companies in practice, this is often done in the heads of people or possibly backed up by certain Excel sheets. So today we will talk about our product called Mylas AX, which is based on Microsoft Dynamics AX, and how this tool can help you in the commodity business by giving you strong ERP support for those processes. So what we do want to reach, that you have an efficient risk management within your ERP and make possible for our customer to optimize use their market opportunities. So I would like to spend a few words about Adifo. So our baseline is adding value to the nutrition industries. We are dedicated to build software solutions which helps to our customers in our target industry to accomplish their goals. We have offices in Belgium, China, and in the United States. We are over 100 employees. Our turnover coming worldwide, so 90% of our turnover is coming from exports, and those coming from customers in more than 60 countries. We are a Microsoft Dynamics AX partner since 2008 with own development and implementation team. We have a certified ISV solution and AX 2012 R3, and we are available also in AX 2009 and ongoing with Dynamics for Operations. A few words about our value proposition. So, as you can see these slides, we offer the possibility to have a standard solution with a market leader ERP software, so Microsoft Dynamics AX, and embedded in this standard ERP solution, we supply industry features which will result shorter lead time and reducing a lot of project risks. We have also experienced passionate implementation team, own implementation team. So we have consultants who speak your language and consultants who have deep industry knowledge. Let's move further about industry trends. So in the commodity market, I put three major industry trends where I want to focus today. The first one, and I think no one of you will be surprised, is globalization. Specifically in the commodity and trade market, you see typical examples that soy, for instance, is produced in Brazil and shipped to Europe. This results in different challenges. You're trading in different languages, different time zones, currencies. Your logical transactions getting more and more complex. You have to apply also for different legislations as well. Another important trend in the last decades, the volatility of the commodity market increased a lot. So this is both in price, quality, and availability of those. For instance, a bad corn harvest in China can cause an effect for other commodities in other continents. Other trend, and the third one, that the complexity of the supply chain increased more and more nowadays. There are more stakeholders which takes a part of the supply chain. So this goes for the following up of the raw material flow. In terms of tracking and tracing of materials for the whole commodity flow, there is a need for effective supply chain management. Due to these industry trends, what I explained in the previous slides, companies in that sector facing challenges as well. I collected a few challenges on that slide. As first, I put risk mitigation because this webinar is about risk management. So how to deal with the fluctuating commodity prices, how to have access for essential commodities in my production process. Those are all risks what we need to mitigate. As we see, most of those risks are related to a vendor. So therefore, vendor rating is also an important challenge. Which supplier you can trust, which supplier delivers you in time and in good quality. Having a large commodity contract portfolio means that you have a need for finance and insurance planning to make sure that you have available foreign exchanges. And that brings you also, if you have a large commodity portfolio, that brings you also that you have a lot of futures and options, what you have to deal with that. And all of this in the commodity world need long-term planning, because most of your company have most probably contracts, obligations for 20, 30 months ahead. So planning is needed. You can run your business. So let's summarize the industry challenges. The raw material market, quality, price, and availability becomes more and more volatile. So we have to manage this somehow. So therefore, looking at these trends, looking at these challenges, and talking to our customers, talking with stakeholders in the market, we try to summarize the needs, what manufacturers and traders need in the following big blocks. You need a competitive raw material sourcing and contract portfolio in order to achieve that. Since nowadays everything happens with the speed of light, especially in the commodity market. See, for instance, Chicago Board of Trade. So you need also to manage these real-time dashboards to manage the daily risk and support business decisions. You need to make sure that any decisions what you make today is a good decisions for the future. So therefore, predictive supply chain analytics, purchase forecasting, and what if scenarios needed. For the decision support, you also need mark-to-market analytics, value at risk, and risk monitoring over long and short periods. All of this will streamline your negotiation and contract processing capabilities. So I would like to here put again the pool question. So how do you currently manage your commodities related to risk at your company? So that was the pool question 1.
And you should be seeing that poll question showing up just to the right. Barna, you may want to just close it on your screen. It's sort of blocking your slides. But yeah, we'll give a few more seconds here for everyone to put in their answers, and then we'll close it out. And do you want to show the results? I'll give maybe a 5-second warning here.
Yeah, I think we can show the results if you want.
All right. Well, all right. I'm going to close this down, and but I can tell you so far the. All right. And let me. Results. So I don't know if you see that, but it's basically 1/3 answered in ERP outside of AX, and the other 2/3 said outside of ERP but in software, in some other software. Okay.
So I think to be honest, it's a typical answer. So I did expect something like that, because most of the ERP is not managing the commodity-related risks. So a lot of companies is doing this in Excel or some specific software. So let's move further, because we would like to demonstrate you something. How can you manage this within your ERP? So the software, what about we make this demonstration today, is Milas AX. So what is Milas AX, and how do we cover this from the software manufacturing point of view? So Adifo and our 40 years experience in the commodity sector enabled us to packaging the best practices to the Microsoft Dynamics AX world. We are a certified ISV partner for AX 2012 R3 and also Dynamics 365 ongoing. We are available in 3 different platforms nowadays, so 2009, 2012 and 365. And Milas, together of course with Dynamics AX, can be implemented as company-wide and covering all business processes at your company. Or it can be also used as departmental solution if you, for instance, are part of a larger group which runs multiple ERPs. It's very important that it can be easily plugged in for customers who are already using Dynamics AX as an existing ERP solution. So some highlights of our Milas AX, and I would like to focus for the first two because this is what about this webinar. So raw material sourcing and commodity trading and risks. We do also something about sales logistics, production support, sales pricing, and best mix interfacing. Best mix means our MRP software, formulation software. So of course we are interfacing this. So but let's focus on the first two sections. Some of about our solutions landscape. So when we talk about Milas AX, in fact, there are 3 big components that make sure that it covers our customer needs. In the sourcing of business sides, we are making sure that whatever you are going to sell, you are able to produce and source it. So we make sure that what you need is available. You can use our features to support your contract management, your logistic planning, or costing support. You will benefit from our position monitoring and risk management tools by having online dashboards about your commodity portfolio. If you use the grain and crop purchase models, you will have an embedded quality-based pricing in your purchase order processing. Of course, all of this is needed because you have customers and you have to serve their needs as best as you can. So by using our sales logistic and pricing modules, you will serve their needs in a more optimal way. Being a process industry specialist as well, we have a lot of features which support about your recipe and label management. Of course, we do not believe that nowadays ERP, it can be an island itself. So we are having heavily internet connected worlds, so integrations are needed. And with Milas AX, it comes a lot of sector-specific standard integration out of box, such as manufacturing software integration, lab management software formulation, and so on and so on. And of course, we deliver also cloud solutions that I think no one is surprised nowadays about that. So some key features, and I really would like to focus now on the first block, because we are not able to cover the entirety of Milas AX today, and really want to focus on the commodity trade. That commodity trade part is our software composes of 3 major blocks. So the first one is advanced contract management and shipments, means you can manage your purchase and sales contracts. The second one, commodity trade and risk management. So it's strongly linked, of course, for the first one. The fourth one is grain and purchase crop management. And the last one is storage and handling. So let's focus now on those ones and move further. So what kind of support Milas AX gives to your company in terms of commodity trading and risk management? So those are the elements what you see now on the slide, where we give strong functional support within Microsoft Dynamics AX. Of course, if someone is dealing with commodities, very often commodities you need to buy in foreign currencies, so we are supportive for currency hedging. If you deal with commodities, most of the contracts are open price contracts, so in order to fix those prices, you need to do price hedging. We support you in back-to-back trading, so a lot of commodity traders don't have an own stock. Commodities are shipped directly from vendor to the customer. We help you for position monitoring, forecasting, mark-to-market comparison, and cost price predictions, because those businesses are normally not spot business. We doing business for several forward periods. So before I start the live session, I would like to repeat some industry challenges, since I prepared some scenarios how to overcome this. So the industry challenges: raw material quality, availability is difficult, international transactions, industry price sensitive, of course. Do I have access to the raw materials? How to ensure that short and long positions are in the right balance? And so on. So all of this, of course, if you look to your commodity portfolio, what kind of positions do you have? You might have raw material stock. You might have purchase contracts, sales contracts, future contract, physical contracts, and so on and so on. You have material on the way to your facilities. You have requirements for the trading, so you might sell commodities. You might have also requirements for your own production. If you produce, for instance, human food, you need commodities as ingredient. And all of this need to be in balance. So, and this balance you need to be for each period. Let's say for each week or each month, it should be in balance. So it doesn't help you if you are short, for instance, in April and long in May, because of course material has to be there in April. On this information, we will give you monitors long and short, about your long and short position, and about your money position, so about value at risks monitor. So before I go to the live demo to EX, some key features of what we are doing, of course. We will supply you contract management. We will supply you information about your contract portfolio, sales and purchase contract balance reports for possible future periods. The information of the raw material coverage will be provided for each period. We will give you an easy insight in your positions. Am I too short, too long for a certain period? And you will be able to select on different contract types. So you will be able to see, for instance, only future-based positions, only physical contract-based positions. We will give you some insight about product hierarchy positions, because if you have similar ingredients, let's say you have soy and sunflower, those might be replaced with each other. So it can, you should have a consolidated position. We will show you the extensive drill down possibilities from the product group till the certain item. We will show you some examples about value at risk calculation. How do you see the values of the position monitor? Some snapshot about the existing value at risks. We will give you some examples about validation system, how you validate versus the market. We can give you some comparison between your prices and commodity market prices, and we will provide the theoretical profit or loss of your contract portfolio against the spot market or against the future market. And of course, this will give you margin or theoretical or realized margin. So let's start with the live scenarios. So I would like to continue with AX. So the first scenario, I am as purchaser working for a production company who need commodities for producing of end products, like for instance human food. So we buy commodities such as oat, wheat, corn from different vendors. Those commodities we also store in our silos, and we consume them in the production processes. We have in this company an own trade desk as well. So those guys are selling these commodities directly to their customers. So we do not have only a short position as projected consumption, but as direct sale of the commodities to the customer. So let's start with that view. So this view will give me overview of my positions per commodity. So the first commodity is oat, the second is wheat, the third one is wheat. Third one is corn, sorry. So which kind of long positions I do have? In the spot month, I have what I have in stock, plus what I do have purchase contracts for this month. So these are my long positions. What short positions I do have? My sales contract, if I sell commodities directly to my customer, and the forecasted quantity, so that this forecast is actually the consumption demand, what I do need on the spot month. And this will give me a balance. And this balance will be, of course, the start for the coming months in April. Of course, in April I don't have stock, but I have purchase contract 100, sales contract 71. Have projected raw material consumption 120. So I do see that in April I'm getting short, but because I was long on the spot month, I'm still okay. So what is also important that I'm producing this material, for instance, I'm making mueslis or whatever, so sometimes I do have an option that I can replace each other a certain raw materials. So therefore, sometimes it's interesting to see what it would be my consolidated positions or all of these raw materials. How do I do this? I just change some settings so I can summarize it. And then I get immediately a consolidated view of all of the raw materials. So I see that, of course, that I'm in June, I'm still going to be short in a consolidated view as well. So this is, of course, only those businesses are important when some ingredients can be replacing each other, like wheat and oat, for instance. Of course, for certain food processing, this is not allowed. So for them, it's only give value the detailed view. So now it's also important that how these figures are coming, because normally if you manage this outside AX or outside ERP, then you can have similar view in Excel. But of course, these are really built, these figures, to the positions, to the contracts, what is made in MyLab AX. So I just, for instance, I would like to see what is my corn position in June. I can enable a detail screen for June, and I click on purchase periods. So I do see it. I move to the corn. So I do see that for corn in June, I have, for instance, 3 contracts, which is available, and all contract is a physical contract. If I go, for instance, the next month, I have another contract. Sorry, I clicked on wheat by mistake. I just go to the corn. So I go back to the corn. So here I see which purchase contracts, which sales contracts, which raw materials, which raw material consumption forecasts are incorporated in that view. So let's go back to the purchase period. Let's go to April. And let's go to the corn. So here we see April, we have 4 purchase contracts and 3 is physical, 1 is future. So of course I might have more future, but in this case, this particular case, I have 3 physical forward contract, 1 purchase contract. If I want to see it, I can go directly to the contract itself. Here you see, by the way, that which contract is with which quantity incorporated in the positions. You see also the price, and you see also the total price. The total price is actually inclusive with the cost. For instance, if you have a freight cost or duties, this is incorporated in the total price. This will be later important in a later view. At the moment, of course, I do not have this in the position monitor. I have only quantity coverage. But let's go back to this contract. So if I want, I can open directly from here the contract from the monitor. So what I do see, this is a purchase contract, which is for several delivery period, multiple prices per period. So it's starting at 189, and it's getting a bit higher in the end of the year. What you also see that those contracts has a certain price and have some landed cost. For instance, here duty, it can have freight or any other cost, which is also partially possible to manage in MILAS. What is also important for those commodities, because, for instance, corn or soybean or wheat or whatever, it's all important that you should have a certain quality parameters, quality specifications also, because you might have soy 42% protein or 48% protein. This is important to your process. In this corn contract, I have some expectations regarding the bushel weight and dirt. I could have something for moisture as well, but in this example is not given. So what I would like to summarize about this, so I close the contract, I go back to the positions, I close the details. So this view will give you an overview about your commodity positions in several months. Of course, the month you can change it. For instance, here I'm looking 6 months to the future. I can change it only to 4 months, for instance. Then I have only 4 months. But if I want, I can play it, set it to the higher, and then I have the 12 months view. So that was about the case 1. So I would like to finalize the case 1 and move to case 2. For the case 2, so the story behind my case 2. So I am working now for a commodity trading company. So we buy and sell commodities. We do this on the spot market and also on the future market. So we are trading with physical forward contracts and future contracts. We do not have own stock. So in this view, I don't have stock. So we have only purchase and sales contracts, and the material, if it's a physical contract, so not a future contract, then directly delivered from the vendor to the customer. So what is very important for me to see my short and long position, similarly to the case 1, but in this, for my business decisions, it's also important to see the prices, the average prices of this. And this view will give me that. And of course, because I'm buying and selling, it's very important to see, do I make profit or loss, so to see my trading margin. So what this view will give you, it's starting also from the spot month and goes to April, May, June, similarly to the case 1. You have purchase contract quantities, but you have also the average cost of the purchase contract for each month. And similarly to the purchase, also from the sales you have quantities and the average sales prices for each month. So what we are seeing here, that my spot position, I'm negative, so I'm short, and I'm also losing money. But for instance, in April, I am long and I have some profit. So this is all fine for my work, but of course I'm a trader guy, so I have to make some decisions what to do. So for instance, now I see that, look, in June I have some problem because I'm short. I cannot supply my customers in June. So what do? I have now my broker from the Chicago Board of Trade on the phone, and he tells me that we have an opportunity to buy 100 ton of these Brazilian soy of $4.25 per bushel. By the way, I'm a European trader now, so those figures are in euro per ton. But of course, I want to buy something in the Chicago Board of Trade, so they are trading, for instance, not euro per ton, of course, but US dollar per bushel. But because I'm short in June, I need to make decision. Do I take this opportunity to buy or I look for something else. So I need to execute a what-if scenario. So what I'm going to do, because it's a purchase possibility, so I create a what-if purchase contract. I'm doing this for June. The possibility is for 100 ton, and the price is $4.25, and not per ton, but just a sec. The price unit is bushel. And of course, because it's dollar, automatically the system recommends to me the current exchange rate, but I had a currency hedging, so I had bought fixed price US dollar in that rate. So I want to see what's happening. So my June position has been changed accordingly, and I see this $4.25 business turned my margin into negative for June. So I'm losing 3.92 euro per ton in June because of if I would take this deal. So I could say to the broker this time, sorry, I'm not gonna take it. Of course, because this is at the moment it's a what-if position, I can switch back very easily to the physical position. So I just uncheck this what-if, and then I have back my situation without what-if. Let's say that I have some colleagues in the States where I do have to report these positions, and those guys are not speaking for Brazilian soy in terms of ton prices, but bushel prices. So the monitor, by just some button click, I can quite easily change from ton to bushel. I can refresh it, and then I have the same figures in bushel. So what I reached now, of course, I see what was my trading margin. I managed some what-if scenarios, and therefore my business decision was supported, so I didn't took this opportunity. So that was the end of case 2. I would like to move to case 3. I just close the scenario. So in the case 3, I'm working as purchaser for a company who buys commodities. For my work, it's very important to see my purchase margin. What I mean with purchase price margin, that I want to compare my purchase prices versus the market prices. So since I have commodity contracts, I have several months in the future, I need also cross-price prediction for each future month. So I just run the overview. So what's happening here? This overview gives me an information about my purchase positions for the predicted future and the predicted future cost price versus the market price. So I do see how many ton purchase contract I have a spot market, April, May, June, July, and so on, depending, of course, on the settings, what I'm playing with it. So I want to change now, then of course it will be then just less. And I have an additional information here what was not there in the previous case. It's not only my cost price prediction based on the contracts per month, but I do have the market prices also for, let's say, Chicago Board of Trade or MATIF, so we can manage also multiple market prices. So what I do see here, that in the spot month, I'm not doing so good, so I'm more expensive than the market, but in April, I have a certain purchase margin towards the market. What is also important that these tools are you can have it also in a graphical form, in a simple form. So I'm just clicking on the margin, and I put this in a line chart. Then I see in a different month how my margin is evaluating versus the market price. So I see that, okay, April and May are much better than the market price, but currently I'm losing money versus Chicago Board of Trade. What is also important that according to IFRS rules, these theoretical gains or losses versus the market prices, I do need to post it in my accounting. But of course there I do not post prices, I post amount, sorry. So by an easy click, I can change the view from price to amount. So then I see that, for instance, in April I gained 927 euro and 10 cents. So what did I reach? Of course, with this case. So I saw my contract portfolio, purchase contract portfolio, so for the spot month and some future months. I saw my cost prices for each given future month and the spot month, and I compared this with the market prices, and I saw do I make a gain or loss versus the market prices. So this was my case 3, and I would like to move to the last case. So the last case is I'm a financial director for companies who deals with commodities, and our company has long-term future contracts for certain commodities, purchase and sales. And it's important for me to see an amount, how much purchase obligation and how much sales obligation do I have for a certain forward period. So I'm a financial guy, I'm not interested in the tonnages, I'm interested in the euros. And I want to know, do I have purchase obligations which I didn't sold, or where I sold something which I didn't bought. So the third line actually give me where is my purchase and sales is not in balance, so where is my value at risks. So this is an important information for a financial manager. So that was the, let's say, the last scenario, what I prepared. So I would like to go back to the PowerPoint. So let's summarize what we did, what we showed. So we showed in Myla CX, which is based in Microsoft Dynamics CX, we had some advanced commodity trade related features, something like contract management, physical contract, future contract management, commodity hedging. I'm speaking mainly about price hedging. We have hedging features for foreign currencies, back-to-back trading support. We have trade and risk monitoring. So we have extensive position monitoring, like this mark-to-market scenario, the case 3, or the what-if analysis in case 2. We have value at risk calculations, like the case 4. We have trade margin reporting. So in fact, what is also important, that we have some advanced forecasting tool for the manufacturing companies, for the ingredients, for the commodity consumption projection. And also from the advanced forecasting, we have monitoring options. So let's move to almost to the last slide, and what means our value proposition. So we would like to deliver the best practices in agriculture commodities to the AX world. We offering possibility to have standard solution on a global market leader software such as Microsoft Dynamics CX, and we could be used for company-wide or departmental solution. So that was the last slide. So if there are any questions, so let's continue with that one.
Okay, thank you, Barna. So if you have questions, please, that you have not yet entered, please use the Q&A block to the right of the window to ask your questions, and we'll get to as many as we have time for. So the first question that came in and apologize, I'm trying to pull it back up here, asks about WMS and TMS inside of Dynamics AX. Someone writes, we use both of these and need to use all the modules of AX 2012 R3 CU11.
Sorry, could you repeat?
So I'm kind of paraphrasing, but I think the question is, do you work with the WMS and TMS capabilities of AX 2012 R3?
Yeah. We are working. We're having some customers who are using WMS and TMS, and so to be honest, at the moment we still certain landed cost calculation we fine-tune towards the WMS loads, but in fact the answer is yes. So MyLab-CX is compatible with WMS and TMS.
Okay. Can MyList generate forecasts automatically based on past sales?
It's a good question. We get this very often. So because there for forecasts you have two kind of options. So first, someone is generating a sales forecast for your end products, and the AX is calculating via bomb explosion the supply forecast, so the forecast for the ingredients. Other option is what we have special MyLab-CX figures that we take a certain time frame old sales orders, and then we generate the sales forecast automatically based on those sales orders. And from that moment, if you have sales forecasts, then you have already the same routine to via bomb explosion to have the supply forecasts.
Okay, I want to make one last call for questions. We have one more in the queue here, and I also want to remind folks we do have a very brief survey that'll pop up at the end. I also want to just open up a very brief poll. If you'd like to get more information from Barna and the Adifo team, feel free to just mark what your interest is. It's optional, obviously, but will give us just a better idea of your interest. So the last question here, can we do short-term run-out calculations?
Yeah, of course. In these cases, it was all long term, so it was about several months. We have customers who are doing more from the operation point of view. So you have purchase contracts and purchase orders from these raw materials and raw material stock, plus you have production orders in AX, and then we calculate. We have a kind of run-out monitor for the certain raw materials when you are going to run out if nothing else gonna happen. But this is of course not per company. For each warehouse and each site we calculate it separately. So we calculate it for the raw materials, and we have another monitor also for the end products. So the answer is yes.
Okay. And one other question that's come in: do you handle storage for grain for suppliers? Storage in quotes.
Yes. We do this. We had a storage and handling module, and in fact, how this is done. So we manage the storage and handling cost, the stock rents, also for the suppliers. Plus, we can generate automatically a so-called stock rent note, which can be charged to the customer. And this is how I said this is a separate model, but we do have it in MyLab-CX.
Okay. Well, that appears to be our last question, so we'll begin wrapping up. Barna, thank you so much for taking the time to present to our audience today.
Thank you, and I hope it helped for you guys.
And yeah, and thank you to the audience for your attention, for your questions. We have recorded today's event. We'll be making that available to you as well. With that, we are going to conclude today's event. Have a great day, everybody.
Thank you. Bye.